Okay, so in case you are still wondering what's happening since November last year, if you recall, November last year is the sell-off for the growth stocks in the US. So I think Malaysia stocks don't really experience any sell-off since then. So that's a good thing. But anyway, in the US markets, there is a huge rotation going on where we see there are a lot of the growth stocks like Affirm, Upstart, Shopify, those kind of the used to be leadership type of the stocks just get heavily sell off, and subsequently the market is not really going very well. Despite that, we eventually see S&P hit an all-time high and then have an uptrust and now come back to below the resistance or the support level. So not a good sign. Anyway, I will talk more about the current market condition. So let's just take a look at the chart as shown here. So this is a ratio chart. So for those who are not that familiar with a ratio chart, it's just like one chart divided by another. So basically, it just compare IVW with IVE. So IVW is the S&P 500 growth growth ETF, and IVE, so that's the S&P 500 value ETF. So pretty much I'm comparing two ETF. So one is the growth and the other is value. So growth divided by value. So what this chart actually shows is it's just a benchmark compare against the value. So when it's trending up, it means that the growth ETF is actually leading the value because it's a relative chart, it's a comparison chart. It doesn't necessarily mean that within an uptrend, both are going up. So that is possible because if the value is going up, the growth is going up at a faster pace or better or greater magnitude, then we have a uptrending chart. So which is likely this case. However, another case could be, let's say if we have a scenario where we have the growth is currently going down and value going up. So that will actually make it like look something like this. So which is the current situation. So if we look at this chart, so starting from November, so let's focus somewhere around November, like middle of November. So this chart actually peaked at mid of November. So that actually means that the growth actually peaked at the November last year. So subsequently, we see another test, kind of forming uptrust, higher high, but immediately fell next bar. So after that, let's take a look here. Okay, a pretty straightforward down channel. So we got a high, we got a lower high, got a low, lower low, another lower low. So we got a lower high and lower low. So by definition, it's just a straightforward downtrend. And just last week, so that's in the first week of January this year, we see a sell-off. So pretty much reach like a selling climax into the oversold condition. So that's like a selling climax. And if you look at this, that's pretty much like a support. So at the moment, I think is kind of saying that we have the growth stocks is just underperform the value stocks because it's currently trending down. And especially in the first week of the January, which is last week, and we see a sell-off. So that is a sell-off. That is a acceleration to the downside, means that there's a lot more growth stocks going into the capitulation mode, or another case is we got the value stock is going up. So if you remember, so this is growth divided by value. So in order for this chart to go down, so we will see that value could go up a lot while the growth is stagnant or slightly going up or actually go down a bit. So that's one way to look at it. So by just looking at this chart, we definitely can conclude that there is a rotation going on between the growth and also the value. So in this case, the growth is definitely lagging behind the value. And at the moment, if you look at quite a lot of the stocks like in your portfolio or in your watch list, you'll probably notice that like XLF, that's the finance sector, or the XLP, that's the consumer staple, and another one is the energy sector, XLE. So they're actually at around, I think it's at all-time high. So they are actually just outperform the market. And if you compare to the growth stocks, you can use a typical like the XLK, which is the technology sector, is certainly going down, or even worse, if you can just use ARKK, I think it actually reflect a lot better because there are a ton of the highly richly valuation growth stocks right within the ARKK ETF. So very much that's the current situation. We got a growth stocks taking a hit, and also we got defensive stocks or defensive sectors within the consumer sector and energy sector, and also the finance sector. So when XLP, the consumer sector, is doing well, is not surprise. It's not surprising because usually this is the traditional type of the defensive sector. So whenever there is a market sell-off correction, likely there are a lot of the flight to the quality or flight to the defensive type of the fund. So they will just go into XLP or the utility sector, the XLU. So it's not surprised to see that they are actually going up. And for XLE and XLF, the finance and energy. So for the finance and energy, they are actually the cyclical sector. So means that is not the traditional type of the defensive sector like XLP or XLU. Rather, they are cyclical. So why are they going up? So I think that's a lot more to do with I think the most easier way to explain for the energy is definitely the oil. So the crude oil is going up since I think since Christmas. So there's actually a Christmas rally which I also talk about for the crude oil. So the crude oil is getting quite strong, but at the moment it just hit the resistance at about 80 and had a reaction. So for the finance is something related to the Fed movement, which we can expect probably around 3 times rate hike for this year, or at least two, so 2 to 3. So that's from the Fed announcement. So that's why everyone is expecting the interest rate is going up, and that certainly is good for the finance stocks. So I think that's the rationale behind. But if we just purely look at this chart, there's certainly a rotation going on between the growth and the value. And at the moment, value is leading. So talking about the value, XLP, the consumer, the energy, the cyclical sector, or the finance and the utilities, they are the value type of the stocks. So if you really want to long stocks, then just can focus on this type of the outperforming stocks based on this current chart of sector rotation in the market. So Nikki just said that sounds like sector rotation into XLP, finance, and energy. Yeah, absolutely. So these are the 3 sectors that you might want to pay attention to if you really want to buy some stocks. So otherwise, another choice is definitely you can short the stocks. So just look at ARKK. So ARKK portfolio, then you will probably find a lot of the candidates that are good for shorting. So aside ARKK, there are actually a lot more downtrending stocks, and they are at a 52 weeks low. So definitely bearish at the moment. All right, so that's market rotation. And another thing that I want you to pay attention to is about the volume. So in this ratio chart, the volume is working as well. So don't worry about whether it's a ratio or whether it's just a chart. And you can definitely tell something is going on with this type of the pullback or the correction. So first, we see that there's an increasing of the supply or the volume with the pullback or the down wave, and subsequently there is a inability to rally up, so forming a lower high, another lower high, and then eventually we see a capitulation. So if you just apply the Wyckoff schematics, so this is something like a buying climax, automatic reaction, secondary test, phase A, test in B, and then this is like the LPSY, last point of the supply, followed by a sign of weakness. So this is currently the sign of weakness. Then because it's currently kind of oversold, well, we might expect some kind of the weak rally if indeed this is a sign of weakness, and then probably just hang around here or even just break below. So this is something that I expect. And another perspective is that, is this really a true sector rotation? Or let me put it this way, will this sector rotation last, or how long can it last? So will the fund actually just rotate from the growth stock into the finance, into the consumer, into the energy sectors? Or are they just as a temporary parking spot for the money? So one way to look at this, I like to take a look at Berkshire Hathaway. I think that should be the ticker. But anyway, Berkshire Hathaway currently just break all-time high. And this is another way that you can tell that a lot of the funds, a lot of the money are just flooding in this kind of the quality or the value stocks. So definitely not a good time to be aggressive.